Hey there.
Hey, good morning. How's it going?
Good. Boy, we have a fun topic today, don't we?
Yeah, we do. Talking all about life insurance.
Yeah, because I got a notice in the mail. And who did I reach out to? My financial professional.
And I am happy to help.
So I guess educate us because I know that when we talked last week, just you and I,
hmm
um, you taught me some things I didn't realize was going on with life insurance these days. So
Yeah.
I'm going to let you kind of take the floor.
Yeah, for sure. Life insurance has come a long way. And one of my specialties is educating people on life insurance and making sure they understand what it is, who needs it, how do they find out how much they need, and getting rid of any misconceptions around life insurance because there's a lot out there. I'm still seeing some stuff on TikTok and social media that's not correct about life insurance, and so I like to clear the air, so to speak. So the first thing that people should know about life insurance is the various types that is available. So the most popular one, the most affordable one, is term insurance. So it's called term because it's for a specific term. So it could be 10 years, 20 years, 30 years, and it's very basic insurance. It will cover you for that term. It will allow a tax-free benefit to be left behind to your beneficiaries if you pass during that term. I like to call it renting insurance. So it's very similar to auto insurance, homeowners insurance. You pay into it, you're covered for a particular length of time. And then when that term is over, you're no longer covered. You don't get your money back. You just protected yourself in that time. And term insurance is really important for people who are in the early parts of their years where they don't have as much wealth, but they have a lot of responsibility. So it could be debts that they have, mortgages, credit card debts, loans, any sort of thing like that. Family, obviously, if you've got dependents, or if you're a couple and your spouse depends on you for income, that's really important to have insurance. Being able to cover funeral costs. We were just talking earlier about how I saw an article that crowdfunding for funeral costs is at an all-time high. People can't afford to pay for their family's funeral costs, and so they're going on GoFundMe and trying to raise money to pay for those things. But life insurance can help cover those final expense costs. So term insurance is that, and it's affordable because it's for a particular length of time. So most healthy individuals, the younger the better, can get term insurance for as little as $15 a month. Obviously, everyone is different. That's why it's important to work with a financial professional who could figure out your insurable need, but also run quotes for you based on your health, based on your age, and all of that kind of stuff. Another benefit to term insurance that a lot of insurance companies are using now are called living benefits. And I know this was something you learned a little bit about that was a really cool addition. So now life insurance companies are adding living benefits to term. And what living benefits are chronic, critical, or terminal illness riders. And these riders are part of the policy. They're not extra cost. And what they are if you have term insurance and you get diagnosed with a particular chronic, critical, or terminal illness, and each insurance company has definitions and types of illnesses that they'll cover, you can actually access your death benefit early, or part of it, in order to cover any kind of medical costs that are associated with that diagnosis. So it's a way to get a little bit of that death benefit while you're still alive that could help pay for something that could end up being a very expensive thing, particularly if it is something critical or terminal. So most of the companies I work with provide that as a benefit. And so that's something I always like to educate clients on and people on to know about, because it's kind of like having an emergency fund you can't touch unless something really you know, important happens or something really medically necessary happens. So, so that's term insurance. Any thoughts or, anything on that?
Well, yeah. So, I was actually talking to another coach yesterday, and he was telling me a story about an older gentleman that had just recently lost his wife to
Mhm.
cancer, and they did not have any type of life benefits and got heavily in debt. And once she passed, he had to file bankruptcy, and he was
Mm,
standing up in court begging the judge, "You can take everything I have, just don't take my house." So,
mhm.
it's just, it's something that none of us want to think about or talk about, but definitely just having the living benefits alone is worth a conversation, because none of us know. And
Yeah.
it takes one
Mhm.
illness, so yeah. So I love this, knowing about these living benefits.
Yeah, and I always like to say that life insurance isn't really about you, it's about your family. It's
Yes.
about making sure they're protected if something happens to you. One of the misconceptions that I've heard on the internet is that if you're young and single, you don't need life insurance.
Mhm.
And that's not necessarily the case. If you have debts, that will then fall on your family if you pass,
Mhm.
or if your family is not in a financial place where they could afford a funeral or final expenses for you. So, again, it seems like, oh, this isn't something I need to worry about, but figuring out what your insurable need is and talking to a professional, um, you know, every person is different. So we just like to educate people and make sure they understand what it can be used for.
Right.
Um, another type of insurance is called permanent life insurance, and that is any kind of whole life, variable universal life, index universal life. These are permanent insurance, so you are covered for your
Your life.
entire life. So the life insurance company will 100% pay out a death benefit to your beneficiaries. And all of these permanent life insurance policies have some extra benefits to them that are really appealing to some people. Um, in the case of whole life, you get kind of money in the form of dividends that kind of gets credited to your account and it grows over time. You've probably heard of like the infinite banking, you know, theory, or being able to use your life insurance as a bank. I don't personally recommend that. I don't
Mhm.
create life insurance policies for that, but there's a lot of stuff there on TikTok about how whole life can be used for something like that. Index universal life is a permanent policy that is tied to an index, so like an S&P 500, and there's a cash value account where your money goes and it grows over time as the market kind of grows, but you can't lose money in it. So if the S&P 500 is down and you're mirroring that, you don't lose money, you just kind of flatline in that account. So that's a really great way to, a bit of a safer way to build some money in that cash value account. And
Mhm.
then variable universal life is more volatile, so you can lose and gain money in there based on markets and indices and all sorts of stuff. So it really just depends on the kind of risk that someone is willing to take, but also um, do they qualify, and is a permanent life insurance policy something that is a good idea for them financially? One of the misconceptions is that permanent life insurance is bad. There may be some bad life insurance salesman people out there trying to force people into expensive policies that they don't need. And it's unfortunate to see that, because these type of policies are incredibly beneficial for the right people. And
Mhm.
I do my due diligence personally to make sure that someone could benefit from something like this, but also could afford something like this, because it is more expensive. Um, the premiums are higher because you're paying for the insurance, but you're also putting money into that cash value account. One of the benefits of something like this is that money that grows in that cash value account, you can access that tax-free at any time. So that's very appealing to some people who want life insurance, because first and foremost, that's what it's designed for. But also like the idea of having some money they can access later on. I know people who want to use it for investment properties. Some people want to use it for their children's education. Some will just let it sit there and wait till retirement, and then it could be a supplemental retirement income. So there's a lot of different ways you can use that cash value. And there's no stipulations on age or, use or anything like that. It's a loan that goes against your policy, and that's what makes the money tax-free. And so again, a great option for people who can afford it and who can benefit from it. And another thing that you can do with it is you can add a long-term care rider on it. So long-term care is becoming more and more of a topic because people are seeing, as they're starting to see their parents get into retirement, or maybe they saw their grandparents retire and start having health issues, that long-term care is expensive. I mean, right now, the average cost of a nursing home is somewhere around $9,000 a month. And the question is, who can afford that? Who can cover that? So a lot of people don't like the idea of using their retirement funds to pay for long-term care, and the potential that it could wipe out their savings altogether. So there are standalone long-term care policies that you can get from insurance companies. But then also, if you already have a permanent life insurance policy, a lot of insurance companies will allow you to add a rider to this for an additional monthly cost. And this will ensure that you can utilize the insurance company to pay for a portion of your long-term care costs. And that can be a place to get the money that doesn't have to be your retirement savings.
Right.
So
No, I love that. I mean, that's why I was like, say what? They didn't have this when we got our life insurance policy. Now, I
yeah.
do have a question for you. So, I would assume if you did like a variable when you're younger, could you move that into, can you move within the whole life or the permanent life insurance to start negating risk as you get older? Or is it once you're in variable, you can't move into the index, or, depending on how your circumstances change throughout your life?
Yeah, so you are able to transfer life insurance policies to other companies. A lot of people are doing this because maybe they got life insurance policies a long time ago, and the policies now have a lot more benefits, bells, whistles, whatever you want to call it, and they want to take advantage of that. So there are transfers that can be done. It does depend on the type of policy. It does depend on the company. There's a lot of stipulations. So again, it's great to sit down with a financial professional who can review all of your documents and your policies and make sure that's something that can be done. But yes, we've also got something that people use something like variable for, is for children.
Yeah.
I'm getting more and more parents who don't love the idea of putting money in a 529 because it's so restrictive. You can only use it for education expenses. And what if their kids decide not to go to college? Or
Right.
what if they decide to do something that doesn't identify as educational? So they're still trying to figure out ways they can save money for their kids, but in something that gives them a lot more flexibility. And I've got clients who have opened VULs, or the variable universal life policies, for their children, to cover them for the rest of their life
Yeah.
insurance wise, because you never know what happens even with children. And B, you're growing that cash value in that account over time. And depending on when you start that policy, you could have a decent amount of money in there by the time they turn 18. If they want to go to college, maybe there's some money in there to help fund that. they want to buy a house when they're younger, that can help put a down payment on a house. Or some people just let it sit in there until their retirement, and then they ensure that their child has, over $1 million in retirement, in addition to what they save throughout their life. So a lot of great ways to utilize these policies that might seem a little bit outside of the box, but making sure that you meet with someone who is going to do their due diligence, going to take all of your information and make sure it's a good fit for you. I would
Mhm.
never recommend any of these things to someone if I didn't think that they could afford it, or if it was a good fit for them. And it's important that people work with a professional that will do that.
Absolutely, and I can't second that more. I have so in my situation, when I got married, we took out a universal life policy because we knew that we couldn't pay for our home if something we couldn't live, we couldn't
Mm-hmm.
survive if we didn't have both incomes coming in, and it was so inexpensive, so
Mm-hmm.
inexpensive. And but now I either need to start putting more in, paying more a month because it was next to nothing when we were 20,
Right.
and and so now the value is not high enough to cover for what we need. And that's when I
Mm-hmm.
reached out to you because I've struggled. I've called this company and they are not specific in just life insurance. They do
Mm-hmm.
other types of insurance. And so I've called a couple of people, and when we talked, I was like, holy cow, I'm more interested in life benefits than I am life insurance.
Mm-hmm.
And I'm glad that I have this policy to be able to possibly, we're working through it to see what our options are. So I loved that. And because as we get older, our needs change. I mean,
Mm-hmm.
when you take these policies out initially, it's for one reason, but then as you go through life, your situations change.
Yeah.
And I absolutely love something that you said to me, and love the 529 option because when my kids were born, it was like, if they decide not to go to college, that money is gonna have to sit there until grandchildren.
Mm-hmm.
It's like I just, ooh. So I love that option. But something you said to me was taking out life insurance policies on your children or grandchildren or your nieces, nephews, as young as they are, because what if they aren't insurable later on in life?
Mm-hmm.
And I was like, I'm like, you have no idea what's gonna happen. I mean, autoimmune diseases.
Mm-hmm.
I mean, just there's a plethora of stuff out there now, which could potentially make them uninsurable. And now they're insured and
Yes.
they're protected. So there's just, oh, this is so good. So
Yeah.
good.
And on that, parents obviously don't want to think about that
No.
possibility whatsoever. But
But if you look at it as a an investment for their future,
mhm,
not necessarily a death
right.
insurance. Yeah.
Right, exactly. And it's going to protect them in their future too, for when they have a family and they have a house and all of that stuff. They'll still be able to have this life insurance that will help cover and protect their family, but they didn't have to worry about, am I insurable anymore? Is it going to be too expensive? Because they got that when they were young, and their parents kind of looked out for them and said, I want to make sure my children are protected, and that they're saving money and all of this other stuff. So
Yeah,
always a great idea to look into something like that, again, if it's the right fit, if it is affordable for the family.
sure.
Something else that I make sure I do, and educate people on, is their insurable need. A lot of people tend to underestimate how much coverage they generally need. And
Mhm.
so I usually do a little acronym. I use LIFE as the acronym. And what what I figure out is for the L, what are any loans or outstanding debt you have? So my understanding is student debts will go away if something happens to someone, but any mortgages, car loans, credit card debts, personal loans, any of those things can fall on your family if something happens to you. So that is an important thing to cover. So add up all of the debts that you have. The next one is I, which stands for uh, income. So income replacement. So if someone's relying on your income, you want to make sure that you're leaving behind enough money for them to continue their cost of living and to make sure they can afford to pay the bills and all of the other stuff. So whether that's
Right.
a spouse, whether that's children.
Mhm.
So generally speaking, we do about five times someone's yearly income for income replacement. That way the family has enough time to
Time.
then change things up and
Mhm.
change their circumstances to replace any income that is lost. The F stands for funeral expenses or final expenses. This can range really, in the state of Colorado, we usually estimate anywhere from $10,000 to $20,000. That
Yep.
could be for burial or cremation, could be for the visitation, it could be for the service, all of those things really do add up and can get quite expensive. So we want to make sure that we add that into the need as well. And then finally, the E stands for either estate or education. So when I meet with clients, we figure out, okay, what number are you at now? And do you think that's enough? Or do you want to leave a little bit extra behind for your kids or your family or to a charity or something like that? Is there additional money that you would like to leave behind as a legacy? And that's usually at the discretion of the client. So they'll say, sure, let's leave behind an additional 50,000 for each kid, or I want to leave behind another 200,000 to go to my favorite charity or something like that.
Sure.
So then after that, you add all of that up, and that's what your insurable need is. And then a financial professional will be able to take that number and, depending on who they work with, I'm a broker, so I work with a lot of different insurance companies. I can
Mhm.
go and run some quotes and find out how much it'll cost based on your age, your health, and all of those kind of things, and come back with a number. And again, make sure that this is something that's within someone's budget that they can maintain, because it is a long-term bill essentially.
It is. Yeah.
If you're looking at a 30-year term, this is something you're going to have to pay for 30 years. So we want to make sure that, does it fit the budget now, but is it something that you can still afford 30 years from now?
Mhm.
And then, like you said, a lot of people's insurable need decreases extremely as they get older. They don't have dependents relying on them anymore. Maybe they don't have a mortgage anymore. So, a lot of times after a term, people won't have life insurance coverage anymore because they said, you know, everyone's taken care of. No one needs to pay for this, that, or whatever. Like we're gonna be just fine, or we're leaving a legacy behind with our retirement accounts or our inheritance or whatever else. But some people do also have the option of converting term insurance into permanent insurance without having to undergo underwriting and medical testing again. So that's also a great option for people if they're almost done with their 20-year term and they realize I still want to have coverage for
Mhm.
life. They can convert that into permanent, and obviously the premiums will go up a little bit, but again, if it's the right fit for someone, they can now have life insurance for the rest of their life and start getting those benefits of the cash value and adding long-term care riders or whatever else they want to do for that.
And I mean, that's fantastic. And life insurance has come a long way.
Yes, it
Long
has.
way. Well, I know we could just talk about this forever, but life insurance is important not just because of the death benefit side, but now that we've got some living benefits as well. And I'll help you find the money to pay for it. And Amanda will make sure that she gets you, what based on your needs. It's not cookie cutter. I mean, it is very specific for each individual and their goals. So we'll drop our links in this live again, and also I'll share the article for my folks in case they don't find it on yours. And this was fantastic, and I would encourage everyone, send us some questions, because there is so much around life insurance. I mean, we could talk for an hour on
Right.
just life insurance. It's a big topic. It's a
Yes,
big topic. Yeah.
totally.
Well, thank you for this. This has
Yeah.
been, I made notes, and,
It's something that comes up a lot. A lot of people have questions about it. Again, the internet likes to,
yeah.
you know, sprinkle the lies in with the truth, so to speak. And so I just want to educate people on it, let them know what it can be used for, and all of the amazing new benefits and stuff that are out there. So if anyone has questions, or if you have a particular question about your own situation, as she mentioned, we'll put our links here so that you can contact us. It does not cost anything for me to sit down with someone, do an insurable needs review, and see if what you already have is good for you, or if you don't have anything, what can we find that's a good fit.
Yeah, and just getting a quote doesn't mean that you have to do it.
Right,
You
exactly.
can just gather information at this point,
Mm-hmm.
right?
Yep.
So this is something everyone should do. I mean, this is not something they teach us. Everybody needs to understand and at least get the information on this.
Yes,
So,
absolutely.
well, thank you, Amanda.
Thank
Thank you.
you.
Until next week.
Until next week, I hope everyone has a great rest of their week.
Yes. Bye.
Bye.